It's just us. All right, so all right, but yeah, 60 contracts. Boy, I know it was off of a 10K account, so you can do it. I'm just saying. All right, so this is the live. All right, so this is the small live that I trade the minis on. This is the one I do on the calls with y'all. You know, I'm just showing people that you could build up. So this is that live that I started with like $100 account. So you can trade indices on a $100 account, which is why I've been saying the minis are great. But the issue with the minis is that the commission is higher, you know, because of the lot size you're trying to do. I'd use a 0.1 because that's going to give me a profit that I'm cool with. That also will keep my margin low. If I use a 0.01 on regular NAS, for instance, that'll suck up about $80 of my margin on my account. Let me if I forgot to mute everybody. I'm sorry. Let me do that. There we go. All right. And then you can mute yourselves if you have a question. So that's the only reason why I came to minis, is because I was trying to help people build accounts who were getting scared. Number one, if you want regular NAS and you only got $100 account and $80 of your margin is sucked up, you know, and you go down 200 pips, that's $20. It might start turning pink. You know what that pink color mean on an account? It means you about to get you know, your account blown. So that's why I went to. Don't act like y'all ain't know what it is. Y'all, everybody had that pink line appear at some point in your trading. And you were hoping that it went positive, but it didn't. And then it closes your position in a loss. And it don't blow your account, but just know that your account is blown when it has to do that. But I've been in a situation where it came back in favor, but boy, I don't like it. I don't like it, you know. But you know, we family here, y'all. I ain't gonna front on y'all. I had them issues, but okay. Here's Nasdaq. So, Nadeem, the question you had asked me, like, why did I take the trade when I had, when I technically that I know what you was talking about. There was a pink zone here in the way, right? Correct me if I'm wrong. If I'm wrong, tell me I'm wrong. You can unmute your mic too. No? Okay. All right, cool. So there was a pink zone here, resistance. So on the H, this is the H4. I'm sorry. Let me go to the H1. My bad. This is what we were looking at. Here we go. This pink zone right here, right? Nadir, that's what you, Nadeem, you talking about this? Over here? Okay, cool.
Yeah, exactly.
All right. So it's like we got a downtrend on the H1, right? And so technically, when this H1 arrow, now I called this H1 arrow out last night. I told y'all before the end of the day, I said, y'all need to be ready for these H1 arrows that's getting ready to happen on the indices. Why? Because I saw, look at, this is what I saw yesterday. All that happened yesterday. Look at this W that was formed in a support zone, and then it pulled out, right? I ain't getting in it yesterday because I didn't know if it wanted to keep pulling back down. You know, I didn't know if it wanted to pull up to pull down on us and break this zone here. I ain't know that's what it wanted to do. If I was paying attention, I should have been in it last night right off of this 55th level. But I didn't. I waited until today. And then also, I was being cheap. I didn't want to pay no swap fees. So that was the other thing as well. I just figured I'll just, you know, work it out today. But I will work. So I'm on the H1. And this first entry I took was literally because it was the beginning of the day. I took it this last night. This is the new daily candle. All right. And I took it right down here at the bottom of that new daily candle. Why? Because I saw this W. I saw the break. This hour candle here actually broke that W neckline, which also was an order block right here. Broken, we're going up, right? So at 7 o'clock, I took this trade. So that last night, that's why I took my first position trade. Okay. Matter of fact, sorry, this middle one. Is that my middle one? No, this one. This is my first position. This middle one happened later today. This is my second position. So if y'all want to see my position, bottom was first. This one was second. This one was third. Okay. This one was based off of the pullback today. All right, so that's why I took the first position. Now, again, I'm taking it against trend, right? This is where you got to look at your overall time frame. Okay, you got to go to the higher time frame, and this is what I started doing. I'm going to try and get this Zoom thing out on my screen because it's all bothering me. Okay, so this is the daily time frame of Nasdaq. Okay, matter of fact, let me bring it over a brand new one so we can start this fresh and you can see what I'm talking about. All right, bet. So daily time frame of Nasdaq. Remember, we are always what? Perpetually bullish on these on the indices, right? Perpetually bullish. Because why? You know what happens if these things start to drop? It ain't just bad for the people in the stock market, it's bad for all of us. Okay? We don't want them to drop like it did last year. Okay? We don't want that mess. We can handle this. This ain't nothing but a pullback. You don't want this to happen. Okay? This is COVID. All right, you don't want that to happen. So every time it drops, it's supposed to drop. It's a pullback. Everybody got to work the market somehow, some way. You want stocks to come down so you could do what? Buy into them so that when they increase in value, you could do what? Sell high. Same thought process, right? So looking at the daily chart, what are we doing? I'm going to draw my fib. Got to draw my fib, okay? Because I need to see what was price doing. Not only are we on a W on the H4, look at this W forming on this daily. Whew. It's an ugly one though. It's an ugly one, but it's doable. All right. Draw your fib, Fibonacci retracement. This is how I came up with the trades that I took today. That's why. All right. This is the move, the last bullish move, the whole move from the low to the high. I don't care where the arrow is, MA is at this point, but it helps that the lowest point below the arrow MA to the highest point above the arrow MA. That is strategy 8 of Fibonacci with arrow. You know, that strategy, I helped create that for a reason. Okay, it applies the way Nate teaches it is on the M15, but I usually trade it off at H1. It applies on any time frame. Okay, it's just that there's other things you have to look for to be able to do what? Find your setup to make sure you qualify your trade. That's all. You can't, I would not just trade off a fib alone. It got to be other stuff I'm seeing to help me take my trade. All right, but we are perpetually bullish. All right, perpetually, of course, meaning I'm always overall bullish, but there are bearish tendencies, as you can see. All right, and they hurt people if you're in a buy and it don't go your way. All right, but this is the daily chart. Now, of course, the high here, how far back did price pull back? Pull back is right here. This is the first one, right? Pulled back to that 50 fib level and then pushed up. Then pulled back again. You see how when it pushed up, it didn't go to zero? If it don't come back to the 0 fib level, it ain't ready yet to restart its trend. Price always has to come back to 0, pass it, and keep going to do what? Continue its trend. It can't not go here, right? If it's going to keep going up, it got to come past it, right? So when it didn't do that, that's a halt. That's a halt on price. And what's another word for a halt? Block. All these beautiful order blocks sitting here on the daily. This is a block right here. This block right here is what stopped this upward movement. Stop right there. Then what it do? Boom, came down. Took a couple of days, formed another block, but came down. Here go another block. Push it down some more. Then you got a daily down arrow on Nasdaq yesterday. I waited. When I woke up when I got into the trade, you see where my first in position is? Right at the bottom of the daily candle today's. The reason being is because I saw that down arrow alert. I was like, oh man, are we really gonna push down? And I was like, no, you came and touched this 50 fib level once, twice, 3 times, each with a rejection. It's time for you to come back up. It's time for you to come back up. We're not playing no more games anymore, Nas. That's what you're doing, right? Last time it did that, look at this. See these 3 daily candles right here? 1, 2, 3. Whatever fib level this pullback was on, 3 rejections, pushed up, pull back down, W. You know what I'm saying? That's all I was looking for again, because remember, this ain't nothing but patterns that keep repeating itself. You just got to be able to start learning how to catch the patterns. That's all. Now, mind you, I did a fib off of the daily chart. So each fib level is a lot of pips in between. You see where my entries are. My stop loss was way down here. That's a lot of pips. A lot. I was willing to take the L on because I plan on holding this for quite some time. Okay. So, of course, I'm going to move my stop into profit because I ain't crazy. It is holiday week. So I ain't taking no L's. But that's how I started to look for the buy on NAS and then worked my way down. Let's go to the H4. The H4 is bullish. Okay, higher time frames rule. What happens on the lower time frames is just for like that day, that hour, those 5 minutes. Those are just price action, how price is moving. Higher time frames rule. All right. In order for the H4 to turn into a downtrend, it got to come and knock all these support levels out. All of them. And it didn't. So it didn't. So overall, bullish, right? Now look at what's happened today. Look at this. This is the W I was just telling y'all about. We in the fourth leg of this W off the H4. Why is this a powerful W? Because it's an uptrend. We're going with the trend of the time frame. It is a W that is anchored in a support zone. We're going up. We have the fourth leg higher than the first. We are going up. And this current H4 candle is a bullish order block. In about 15 minutes, it will be a confirmed bullish order block. It will be a confirmed neckline W neckline break. It will be a confirmed bullish engulfing candle. And when I mean engulfing, it engulfed all of this and all of this. We going up. Okay. Those are things that I was seeing happening on lower time frames. Key thing that clued me into that was this order block that formed. Okay. This bearish order block, this rejection that occurred to that order block, which caused all that downward mess that happened at market open. And then the fact that this block was coming into this support zone and it wasn't going any further. I saw that as just a that was a massive stop hunt. Massive stop hunt. Okay. So that's what that was doing to me. Those are all the things that I was looking at down on the time frame. And then here's the H1. Okay. When that up arrow came, I was in there. This is my second position right here. I was in that thing. As soon as that thing came up, I went to bed on this. Woke up, look at that order block that formed. Look at this push down that it did. Look at that push up that it did. And then look at this. This would be like an M, right? Because technically it is an M. Technically we are on a downtrend on the H1. Okay. This candle was an M neckline break candle. But then what happened? It had the support zone sitting right here and it didn't break it. When this rejection right here occurred during the H1, when the bulls started pushing up, that was time to go. That was time to go. Right there. All right. If you were not in this trade at all, that would have been another indication. All right. Because this is a rejection off of what? Order block right here. Right here. Look at that block. Right there. This. Okay. That's a bearish block. Right. Rejected, came down, got some money. All this was is they came down to get some money and then boom, gone. Okay. So if you took the H1 trade off the arrow alert, where would your stop have been? Okay. This is where the stop comes into play. If you would have took it off of the H1 alert, because I have my daily fib drawn, my stop is the next fib level at price after price have retraced to. Here's the 50. That's why my stop is down here. Right below that 61.8. Right below it. Okay. That's how I usually do my stops, but that's all for the daily. It's a lot of pippage in between these fib levels. If you wanted to tighten it up, then I would have just drawn the see, this is the upward movement here, but where's your last upward movement to determine your stop? It would have to be maybe this, but it's too far away. Maybe this, not really, because then it kind of pulled back completely on it. In that case, if I was only just going off of the H1, then my stop would have been underneath these right here, which is what? Order blocks, right? So that's why I took that. So I took the trade, one, because of the order block push that it did yesterday. That's first position, right? Even if I am going against the trend of the H1, H4 and D1 are dominant. You know, they dominate. They really dictate where we're going. And because I'm always perpetually bullish on the indices, that's why I took it. And especially since NAS was rinsing people. You know, 1 push down, 2 push down, 3 push down, 3-day push. That's a market maker method move, right? So with that 3-day push down, rinsing everybody and everything, it was time for it to pull like a 3-day push up, 3 to 4-day push up. All right, off of basically just looking off of the H1. So that's why I took that. Now, when I took these trades, trust and believe, and I told people, my feelings was hurt during this mess right here, because I'm in, this is my first position, this is my second position. Look at where my second position is. I was in all that nastiness drawdown. You can ask my guy Lex. I'm sitting up here complaining to him, why, Nas, why? You supposed to be going up. Why are you trying to rinse us? But what that was a stop hunt. You know what I mean? They were pushing price down to get rid of all the buyers because they wanted to get all of that liquidity, get all them orders, and then rinse everybody who was in the buy. That's what the drop was. And then rinse everybody who was selling. That's what this buy is. But if you know what to look for, you would have held for it if you could. If I just would have had one position, I wouldn't have been mad, because technically my max drawdown off my first position was about 700 pips. I'm okay with that. That's fine. You know, that's okay. I can go 1,000 normally on one position as drawdown. Typically, I really don't like to. 500 is really easier. I think that if I go past 500, which I did, then I'm either too early or my position is crappy, pretty much. And in this case, it was early. Okay, it was early because they came back and they came for me. Right. But that's because, you know, I know what I'm tolerating in my risk when I'm taking my trade, and I'm in 3 positions. So just so you know, this number was looking real red this morning. Okay, like 2 hours ago, this thing was red, and it had me in like I had a little itty bitty tear for a minute, and I'm like, yo, right when it was like this, what hour is this? 10 o'clock, that 10 o'clock hour, which is the beginning of the new H4 candle. This is what I was looking at. I saw this drop at 9 o'clock. I said, all right, Nas, you just playing. You know, this is just the market open mess. All right, you just playing. But hold up, Nas. Like right here, you just playing. When you came past my second position, I'm like, oh, wait a minute. You not playing. You know, and then I took a third position off of an order block. That's where that third position came. So the third position came during that pullback still. So I was in 3 positions and I was in drawdown. That's why that number was real red. Got to like 3K and pips down. Really. I know that's a lot. It's a lot. So on this mini, okay, 3K and pips on the mini, it's like what, like $30, I think. But again, I'm on another account in a regular NAS. Let's say them 3K and pips, but it wasn't feeling so good on that one, okay? Because that was regular NAS. But I trusted my analysis. So this goes back to what Dante was saying on the call when we like, he's stubborn. I was stubborn because I'm like, no, No, I know what you're doing. You're trying to rinse me. It's not going to happen. The only thing that would have convinced me to get out this trade that I was wrong is if it would have closed below this order block that I marked off. If it would have closed below that on the H1, matter of fact, then I would have known I was completely wrong and I needed to just go ahead and take that L and walk away with my tail between my legs. But when that thing started pushing back and this 11 o'clock, and that created that nice little doji, and this 11 o'clock hour started turning bullish, I said, yes, I'm right. But I'm in 3 positions. I don't take no more than 3 positions on one pair. So that's why I couldn't take another position down here, even though I was itching to do so. So I would have been in 4. But hopefully, Nadine, I didn't talk too fast, but I explained how I got into those trades, regardless of what the time frame trend was telling me, is because I know, like when you're on the indices and they always are perpetually bullish, if the H1 is bearish, it's still a retracement, and you trying to determine how far back is it retracing. So I wouldn't draw my fib off the H1. Excuse me. I would draw it off of the H4, which I can't, because as you see this mess, you see that mess is all that ranging going on. So because of that mess, I wouldn't draw it off the H4. I would have to come to the daily like I did to get a clear visual of what the move is, how far back did it pull, and then I now see what's forming. Now look at this daily bar. Now look at that daily bar today is bullish, engulfing new order block being formed. That's what it's looking like right now. And it's about to be 2 o'clock. And what happens at 2 o'clock? The new H4 candle is appearing. So this will be a confirmed W neckline break, H4 bullish engulfing, anchored in a support zone, go time. And TP for this is the 0 fib level up there. As usual, remember last week I was saying I'm trying to go back to the all-time high. That's an all-time high that NAS will be going back to if it does make its way up there. I'm not saying it's guaranteed to get up there. So don't y'all hop in here and be like, hey, Jackie, you said it was going back up. I said that's where my TP is, yes. But if it don't, I ain't taking no L's today, and I'm moving my stop loss into profit, and I'll just walk away before the end of the day. So we'll see. Now, what's going to really be a problem for me here in 1 minute is when this new H4 candle opens. And if that thing starts to turn around and turn bearish, like it'll start here and it starts to go down and form a railway track going bearish, like it's new H4 candle right now. Powerful candle, new H4, new H1, new M30, new M15, new M5, new M1. That's all what this candle is. That's all what it means. Those are currency pairs. We ain't talking about them right now. New H1, look at what this H1 candle. When you see things like this, go down into your time frames and look at what formations have occurred. We got the W on the H4. We still looking good for the bull. Look at the H1. There's your W. Not this. Okay, not this. 1, 2, 3, 4. Not this. 1, 2, 3, 4. That's your W. Okay. This is a fake out. Here is your W. Second leg higher than the first. It's an ugly looking W. It ain't perfect, but that's a W. Same W is off of the H4, right? And when you see it that way, you start to see what occurred. I'm going to look at it now. Look at where price is at right now. It's all up in this resistance zone. If it's intending to keep going up and make its way back up to the 0 fib level and beyond, it's going to bust through that resistance zone. You know, resistance and support zones are temporary. You know what I mean? They just there. But they're not solidified. You know, anything could break through them, just like it's doing right now. What did this also do? This one H1 candle, what did it do? But it closed above here with all these rejections, all these order blocks right there. Look at where it's at. Look to the left. Look at this order block. All that. Okay, look at where price is hanging right now. All right here. This is a trouble spot. Okay, so in order for it to keep going where it needs to go, it got to pass through this trouble spot that it's on right now. All right, so you just got to keep an eye on it. Look at the M30, same thing. You can tell why it's a trouble spot. It's a resistance zone. It got to bust through this resistance zone. Matter of fact, you know, we have a money zone breakout that took place. Look at that. Already took place. Money zone breakout defines what? Momentum. Okay, if you were waiting for the money zone breakout, it just happened. All right. So that's that. And I'm trying to just see what else. As you go down in the lower time frames, boom, here's a block right here. The block, and then look at this candle. Used the block as a form of support. Take off. Beautiful, 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 beautiful. Then there's my 3 entries. As you can see, just this whole mess right here. I was in pain. I was in pain all the way down here. Until it turned around. Honestly, this is that order block that I marked off, and thank goodness it, you know, it rejected off of it, but I would have had to just take that L. Boom, it's gone. I remember also, courtesy of my girl D, every new hour you get an impulse, like an impulse somehow, some way. Price just does a little burst, either in your favor or not. So that's just something to take a look at. It's a weird W. Yep, absolutely. So that's, I'm just looking at the M5. See, we over to 38.2. 38.2 of what? Of the daily Fibonacci. So if you look at this, look at the overall. All right, look at the overall move. Look at the pullback, rejection off the 50, and we're going up. You know, really, the key thing about this to see if it's really going to continue is it needs to get past all this mess. It needs to get past all that. You know, so we'll see what happens. And then we're going to come down to the M1. Okay, let's come down to the M1. Remember what I say on the calls when we scalping off of the M1. Mind you, I didn't say it in the beginning, but the reason why I'm on the mini, one of the bad things about being on the mini is you got to look for longer moves. Like if I'm on a regular NAS and I'm scalping 50 pip and dip, that's easy. You know, 50 pips is only a $5 move on NAS. You done. On a 0.01, $5. On a 0.1, $50. Easy, right? But if you want NAS mini, you can't do 50 pip and dip because 50 pip and dip might not even pay your broker commission, right? So you got to go for longer moves. So you got to get more skilled with being able to catch 500 pips instead of 50,000 pips instead of, you know, 100. That's why NAS mini, it's a great way to I think help you learn how to trade the indices and be able to catch these longer moves. You know, like my man Bobby will say, one of the things we got to do is take a look at what's happening in the market, right? What's happening in the market? What are they trying to do today? You can clearly see what they was doing today to people. It was the rinse. The rinse was not the play, though. The rinse is not the play. The play is the buy. Clearly, right? The rinse was harsh, mind you, and this is like 3,000 pips, honestly, from whatever this high is. I'm gonna mark this here because this is standing out to me. Yeah, this is standing out to me. Okay, so this was 15,833 to down here. All right. Yeah, 2163 in pips, but that's not the move. This is the rinse, the stop punt, the getting out of everybody that was taking the buys from what they were trying to entice. All these buyers, me included, all these buyers in this buy, and everybody's, oh, that's just a pullback, we'll stay. Oh, it's just a pullback, we'll stay. Come right back up, rinse. After the rinse, we're good now. Let's go. That's what you got to look at when you're looking at this overall. Plus, look at this move here. From it going up here, 3,000 pips. Way more than the 21 that they took people out on, right? That was the move. This was the play. This was the bait. This is the move. All right. But I like seeing this down on the M1. That's why I'm down on the M1 more. Sometimes you can't see it so I was in the drawdown. So sometimes you can't see it right away. But if you have other things telling you that your trade is valid and ain't hit your stop loss, you okay with your margin, you okay with whatever that drawdown is, hold your trade. Trust your analysis. Trade your chart. We can all be wrong, but you know what? You guys have been doing this for a long time now. Trust yourself. And if it's wrong, it's okay. Learn from the mistake. They took all that Christmas. Yes, they did. That's the same thing Lex said. NAS was not playing with people today. All right, so that's NAS. So again, I'm going back to the H1 and look, I done messed up the whole new chart that I created to show y'all. But that's the H1 and look at it pushing up. So now that it done pulled back to the 50, and remember, on fib levels, 50 and above is retail, like us. 50 and below, that's institutional. All right. They came down to the 50. 50 is, I think, as I've been studying VIB more, 50 is a lot more important to me than 61.8 now. Me personally. All right. And I'll tell you what, 0 I have linked on here right now as my TP, but it's not. That's just I just marked that area in case it hits it while I'm asleep. But if I wake up and it ain't there yet, I'm taking that off. That's not my TP. That's where I'm going to take, again, partial profits. But my TP is the negative 50. However far back it pulled, and we're going to negative 50 up here. Y'all want to see how many pips that is? That's not only an inverse correlation to strategy A to Fibonacci. That would be a spanking brand new all-time high ever NAS has ever been to. All right, and from where price is right now, just right now, to where that is, I don't know if y'all see that middle number, but that says 20,390 pips. 20,000. So this technically could be and that's off of that where price is at right now. Okay. And can you hold it that long? That will be the thing. Can you hold it that long? Can you, and a matter of fact, it ain't even like, can you hold it that long? Can you stack positions? Can you take profit, stack another position on to hold that, to be in this entire trade? That's what I'm trying to do. I'm trying to be in this trade up until that point, stacking positions like y'all saw my man Jason did off that NZD CAD trade like a couple of weeks ago. He had like, I don't know, 100 positions, but stacking the trades and taking partial profits so that you are never in an L on this entire move. That's what I'm trying to do. I ain't been that good to do it, but I'm gonna try it now. But I know I ain't taking no L on this. So that's just my whole thing on NAS. I spent 40 minutes talking about Nasdaq. Are there any questions as to how I got into this trade, why I got into this trade, and anything else in regards to this trade on NAS? You can unmute your mic too if you want to ask.
I have a question.
Go ahead.
So I'm looking at, well, I'm barely starting to actually take my own trades, and I'm like, I'm trying to perfect bag entries.
Mm-hmm.
And I was looking at, well, I actually just took my first dub like 30 minutes ago. It cost 200 pips. I was so happy. But I was gonna ask, would the bag strategy be safe to take on indices? I'm barely starting to look at it, and like for me, this looks like a consolidation. I know the Fibonacci, I haven't got to that one yet, but the Fibonacci would help, and what you used, everything is telling you to buy. But I'm mostly sticking to bag. Should I wait to trade indices until I learn Fibonacci and all that? Or would I try and perfect bag?
You know, this is a bag trade actually, right here. You got bounce, arrow, go. But the thing about it is that it would be a counter bag trade because it's going against the trend of the time frame. I would say this on indices, you don't have to wait for Fibonacci to help you trade the indices. Because at first, I didn't have it when I first started with Arrow. I didn't know anything about Fibonacci until October last year. So I've been on Arrow since August last year. When I first got introduced to indices, it was because of Arrow. So Nate got me on S&P because we were on a 5-minute time frame. So he taught to trade Arrow on a 5-minute time frame and take bag entries off of that. You can catch 50 pips and dip. That's where that 50 pips come from. But S&P is like a currency pair out of all the indices. It's a little slower moving, so you could take bag entries on that. The difference with indices is drawdown, potential drawdown that you got to deal with. Case in point, here go Nasdaq on the M5. Okay, and if you zoom out at this time anyway, you got 2 pink, 2 green. There was probably a third pink right here that it just blew through, like it had like there was no such thing as a zone. But you would have been on a downtrend. So if you would have waited for that and you took your bag entry for these 2 down arrows, you would have been following trend. And those are bags. There probably was a pink zone here, and it would have been a bounce because price came and touched it. Arrow, go. The only thing is, with those bag entries on an index like NAS and US30 is when stuff like this happens. When you're in your trade here, and this is your drawdown. So you get into your trade here, probably down a little bit more because you got spread to deal with. And then look at it here. That's about 255 pips drawdown on NASDAQ alone on the M5. A lot of people can't handle that type of drawdown when you're on these indices, regular indices. So I would say if you want to practice it and you want to be able to start getting used to and familiar with the indices, be on these NAS on a mini. Go to a broker that has mini on there and practice and utilize them that way. So that way you're still using the bag entry, you're still using the same strat, and you're using it on an index, but your leverage isn't as high, so you can tolerate that kind of drawdown easier. And the reason why I bring that up too is this: 255 or drawdown on an index on a mini on a 0.1 is only like $2.55. However, regular NAS 255 drawdown with a 0.01 is like $25. You see what I'm saying? So sometimes some people, depending on their balance of their account, won't be able to handle those type of drawdowns. But yes, bag works on anything. I even use it on oil every now and then. It's just mess like that. And so the other thing I would say is, which is why I caution trading indices prior to 9:30. So I only trade the US indices. I don't get into DAX or anything like that, even though people still trying to get me over there. But I trade the US indices, and I really only focus on them 9:30 and going forward when the stock market is open. I mean, this happened prior to, so you still could have traded it and it worked out for you. But I'm just so used to doing after 9:30. You know, that was that's all I want to say. Hopefully that answered your question. Yeah, Charlie, I'll be posting a recording. Absolutely. You got it, Jeff. Chart patterns, candlestick. Yeah. Make sure you understand that not only candlestick formations, because I'm not the best on candlestick formations. I'm still like incorporating it into my trading. But and everybody can tell you last year, I could care less about M's and W's, honestly. And don't even get me started on wedges, okay? I can't draw to save my life. But Nate is such a great teacher, which is why I'm so glad that I was introduced to Nate through Arrow, by the way, because I didn't know Nate prior to this, but the way he was explaining M's and W's and wedges, I still ain't drawing no wedges, so don't ask, but M's and W's, I'm incorporating it more and Googling it. You know, I'm on YouTube, I'm listening to every YouTuber I could possibly find that's talking about M's and W's. Even though there's going to be some YouTubers that don't correlate to you, and that's okay. But something that they say might stick with me. And I'll just cut the video off and go to somebody else, you know? So I'm stay on YouTube, M's and W's and wedges and order blocks. There are a bunch of videos on order blocks. People do them in different ways. Mitigate order blocks, litigate order blocks. Was one valid? Was one a breaker? All those kind of things, all those terminologies are out there. And, you know, Nate's talking about them a lot. You know, I'm starting to talk about them a lot because I don't trade without doing an order block now. Like my man Lex say, we got it in our group now. Like when me and him are trading, we take a trade. In that trade, did you use an order block? What order block did that come off of? If I can't tell him or he can't tell me what order block that thing came from that made me take that trade, that ain't our strategy. Point blank, period. I will not take a trade no more if it ain't got no order block in my setup, because that's how powerful they are. Okay? I'm just saying, just make sure, as you can clearly see, that's how powerful they are. Oh, look at you, Dr. J, with that UK 100. So that's Nasdaq. Nadeem, was there any other questions, darling? Did I answer your question about the bag?
Yeah, everything was good. I just have one more question just for clarification. What is, so RINs, I'm assuming it's kind of like tempting people to get out on like the least amount of drawdown, like before they lose more, or what is rinsing exactly?
Oh, that's just a term I come up with when I see the market either dropping or pulling up. So for instance, when I said rinse, this move right here, this downward move that you see Nas do, what they were doing, this is why you got to look at you always got to zoom out on your chart so you can see overall what's going on. Don't just come down to the M5 and only trade just the M5. Don't just trade a bag entry just because you see a bag, because sometimes a bag ain't gonna work in your favor. Even if it's going with the trend, even if you got 20 pips to the zone, all that stuff could be great. But if you don't look overall and see that you're about to get rinsed, meaning that you're in a buy like this, for instance, this buy right here, right? Somebody did a bounce arrow go, they took the buy, one, it was counter trend, that was not in your favor, right? And then when the market opened, but they're like me, and they're like, oh, it's going up. You know, NAS is about to go to the stratosphere. We're going to take this buy. Then the drop happens. This drop right here is a rinse. They're taking out buyers, people that are everything in the market. Everybody got to have, when we're in a buy, there is somebody on the other side that is selling. That's how the market works, right? Every buy, all of us. Every time there's a buy, there's somebody selling. So for those buys that I'm in, there are sellers on the other side. The sellers could be other retail traders like us, or the sellers could be the institutional banks right there. They got sell orders going on against my buy, right? That's how the market moves. That's how it works. That's how you keep balance. Now, the way we make money is when we close our positions in the positive, okay? So all these people that are buying, and me included, we see the movement, we see the up, whatever technical analysis, whatever fundamentals we saw were in these buys. The market makers were like, okay, let's drop it down. This is a retracement. So people like me, we drew our fib. Oh, we retraced to like 38.2. Great. And then we see the bullish movement. We're going in for another position for the buy. When stock market opened, it stopped right here and then dropped. You see a drop like that, that is them pulling all these buyers out the market. And everybody's getting their stop losses hit. You know, people who got into a buy too late, they got hit. All the stop losses are getting hit here. And with this, as these things are dropping down, now sellers are coming into the market. Okay. And so sellers are like, oh, hey, the buy is over. We're still on an overall sell trend. Let's start selling. Sell. And everybody's making money and they're all happy. And all the stop losses in profit are being moved, right? That's why sometimes I talk about I don't move my stop into profit until I see a certain move happen. All these stop losses in profit are being moved too soon or soon enough based on what you see here. And then when they're ready and it's down and they've dropped the price down low enough to what they, and I mean they, meaning institutions, market makers, are looking for, then boom, they're going to pull up. And so this is another rinse. This is rinsing all these people that were in sales and now took them all out. All the buyers are back in again. All the sales are out. So now all the buyers are in, and now stop losses is being put as things move into profit, like what I'm going to be about to do. And if they want to rinse people again, they're going to drop it again and hit everybody else who has stop losses from the buys, which I will be one of them because I ain't taking no L's. So I'll take the stop loss and profit. But so that's what the word rinse means when I use it. Did that help?
Yes, thank you.
You're welcome. So let's see here. Anything else? Any other questions on NAS? Or we could take a little looky-loo at so this is the demo that I have copying into my MT5 because we don't have arrow for MT5. Nate put that out there. So I have to use social trader tools to do my trades. And this is a little different. This is different. So I did not take my trades in both accounts at the same exact time, as you can see here. So here's NAS. Okay. NAS first position is here. Okay. That would be this one here. All right. I think. No. Excuse me. That was off of the H1 alert that I got in live. But as you can see, I ain't got no H1 alert in demo. I ain't got one. So if I was waiting for an H1 alert and for a demo trade, I would have never got it. But I had it in live. So I said, all right, bet I'm gonna just take this trade. Because this demo is coming into my MC5 live. So if I needed to make the money, I was gonna do it. So that's the first one. And oh yeah, I got you, Dr. J. And then of course, same thing happened. And then when it pulled back, that's when I took my second position here. All right, so I took the second position after it did this, and then it started pushing up. I took the second position here. And that position was not off of this H1. It was down here. I think I did it off of the M30, if I'm not mistaken. Yes, I did it off of the M30 because look at that order block. So, and then I got in. So I was a little late, but I did it off of the M30, but it was off of an order block for the buy. And then I got in, and then of course, that's why I shoot up. So that's why this one is from here to here. And then this NAS is from here to here. Okay. So first position was off the H1 alert. Second position was off the M30 order block going up. All right. And if a support zone appears here or strengthens this one, then this down arrow is going to look like a bank induction later on. Okay. Just so y'all aware. So that's NAS. And then here go good old US 30. Now I'm going to tell y'all something. And my guy Lex, he'll tell y'all if y'all ever ask him, add him in the chat or whatever. When this morning before I had to go deal with my grandson, I quickly traded. That's why I was posting those stuff to you guys because I didn't have a lot of time this morning, but I wanted to still take the trade because I knew I was taking this buy. And I took US 30 because I ain't getting near US 30 alert. Not off the H1, not in live or demo. Okay, not in live or demo. Why did I take this trade for the buy? And I only got one US 30 position because order block. Right here, these order blocks. Same thought process as Nasdaq, right? Same thought process. I'm still perpetually bullish on indices, right? So I still got this order block right here. This one, these two, 1, 2, all right? And then boom, the bullish engulfing, I'm in on this candle right here. And I had to deal with that drawdown. I had to deal with this drawdown and this and this. And then it goes up. Now, look at this. Here's that crap that was happening today on Nasdaq, right? You see how US 30 ain't come nowhere near my position? Nowhere near it. It never gave me an opportunity to take a second position. For me, like, I mean, there is opportunity to take a position going up, but I was thinking more of the pullback because NAS was killing people today. So I thought US 30 was getting ready to do the same. It did not. So that's the only reason why I'm not in an additional position on US 30. US 30, even when it came down here, it was still good to me. So I said, let's go US 30. And it was also beautiful because look at this order block right here. These two, 1, 2, and look at the candle rejection. Rejection. Boom, gone. So US 30 is beautiful today for those that caught him, right? So I'm up on that. And then S&P. I ain't forget about S&P. I ain't taking in that other one, but I took it over here. And this is why I'm in the trade on both positions. I should have been in the third position on S&P now that I'm looking at it. But I was so focused on Nasdaq because of the rinse it was doing. I just didn't come on. I said, never mind. But I'm in two positions on S&P before the arrow alert. Okay, before the arrow alert. Why? Same thing as US 30. Order blocks. Right here. Same exact move. Order block, bullish engulfing, in on the trade. And then I think I got into another position because I think it pulled back. Oh yes, it pulled back today here. And so when S&P went down, I think it was down like 25 pips, I took another position because for S&P, since it moves a little differently than NAS and US 30, when it goes down 25 pips, 25 to 50 pips is when I'll take another position off of my first, depending on how confident I am in the trade. And as you can see, I'm pretty confident. But here's that bounce arrow go, even on S&P. So now look at S&P. There was a pink zone here, and S&P just destroyed it. Okay, but bounce arrow go, bounce arrow H1 go. If you would have just waited for the H1 trade, now I'm gonna come up a little bit because of spread, you would have been in the worst drawdown of about 240. I was around at 245 pips, and then round up, you should be at 389 if you waited just for the H1 arrow alert. And you got it in live too, because I got it in live, and I'm in two positions. So, and I got some ways to go. And everybody know when I'm on the H1 on S&P, we going to the zone. Look how far the zone is. Ain't nothing stopping me. Okay, here's an order block right there at that zone. Guess what this also is? All-time high for S&P. All-time high. That's where we going. Okay, and look at that W. Second leg is bigger, better, not bigger, higher. Second leg higher than first. Boom. I gotta stop right here. Today's candle, bullish engulfing, beautiful, 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 beautiful move. That's how I'm up those pips in this one. So that is the three indices. Then that's those trades in Forex. And so let me know. I said I was going to get off at 2:30, but I'll go for another 15 minutes because then I'll go into Nadex because I took the NAS trades in Nadex as well based off all of this. So I'll stop right here for a second and wait for any questions y'all have on order blocks or why I'm in these trades, so on and so forth.
Hey Jackie.
Yes.
Hey, you said on the fifth level, you said the 50 and above is retail and 50 below is institutional, correct?
Yes.
Okay, that's all I need. Thank you.
No problem. Which is probably why you see me get so excited when if you're like on the H1, because on the daily it's going to be hard for it to do it because that means it got to come back quite a ways to do this. But this is why I get so excited. Like if you see me on the H1 and I'm like, look at these discount fib levels, 71, 78.8, 88 points. When things get down there, boy, man, sometimes people are like, well, if it comes past 100, it's a whole trend. It's a whole new trend. Yeah, sometimes. But if you get a wick rejection, like what I showed y'all for the 50, if you see this off the daily, off of an index down here, oh my goodness. Look how far you got to go because again, they got to come back to zero in order to keep going. You know? Now those are like 40K days and whatnot if you want to hold it. People ain't got patience like me. You know, some people gonna be like, ain't nobody trying to hold that for like a week, Jackie. It's okay. The same concepts that I'm talking about right now can be applied on a lower time frame. It's just that you want to make like I already set my record. You know, last week when y'all saw me knock out them 13K in pips on the call, that was the record of pips that I've ever made on an index before. I ain't never do 13K in pips. So I was pretty proud. I was pretty proud of myself. So now I'm trying to break that record. You know, I'm going for like 20, 40. Just to see if I could do it. That's
You're
all.
gonna double it.
Huh?
You're gonna double it.
I'm trying to. I'm trying to. Oh, Charlie, you're welcome. You're welcome. Oh, no problem, Debbie. No problem, darling. I got you. Man, I'm trying to hold
Jackie,
this.
question.
Yeah.
Did you put your stop loss and profit on this account yet?
No, not
When
yet.
would you do it? When do you feel comfortable doing that?
Let's see, it's 2:30. I'm gonna do it there in a minute because I'm looking at the time and I don't want it to see, I'm not too far away in my trades. For instance, let me go down to the M1 and see what we're looking at. See, even though you see how high the pips are, I'm really not that far away. So I was hesitant to put myself in a stop and profit just yet, but let me see. I always go off of the M1. I don't go off of other time frames. This is too high to put me in profit. That's a good question. Now that I'm looking at this, let me see where I'm at on H1. This block right here will probably be beautiful to put my stops in profit, but I'm afraid it'll come back down, bounce off of it, and go up and knock me out. And I ain't trying to do that. So what I will do is I'm probably going to move. See that this second position is what's irritating me. It's too close. I know my first position was good. I think what I'll do is this. I think what I will do is actually just take half profit at close to 3 o'clock. I'll take half profit and then I will probably move my stop up. So I'll probably move it up in here. I wouldn't put it into profit just yet. I'll just move it up. So if it does come back and hit me, it will not be more than what I secured as far as taking partial profits. That's what I'll do. I am just not hesitant. I'm hesitant to put it into profit because I feel like it's going to come down and knock me out. And I really don't feel like sitting here trying to find positions again to ride it back up. So I would be more safe to do this, like move it like right here, which is cool because it's still under the 50 fib level. So I will move them, all three of them, right under there. And then around 3 o'clock, wherever price is at, I'm going to take a partial profit, maybe a point, maybe half, I think. And then let the rest ride. And then if it starts to pull back, then I'll determine if I'm going to take more partial profit or what. But that's kind of how I handle it right now. It varies too. I don't always do this. Like if really what I really would have appreciated it is if this thing had did an impulse and if it was up here, you know, at this fib level, then I would have been more than comfortable to put it in profit. So that's kind of what I'm going to do. When it gets up here to this, and it has to look like that's on the H1, by the way, not off of the M5 or the M1. And when it gets up here to this fib level, that's when I'll move them into stop loss and profit. And it'll probably be right at this OB right here. And then if it does pull back, I'll get hit stop loss in profit. And I would have already, you know, secured additional partial profits at that time. That's how I'll handle this. And that's typically how I normally go about them. I try not to go into profit early because of pullbacks, because that's what they're trying to do. They're going to knock you out. So that way they can, because that's what happens, you know, when it hits your stop and it like wicks out at you and then turns around and goes to your TP. NAS is funny to do that. All these wicks is probably what happened to people. So that's what I'll do. That was like the longest answer to your question. I'm so sorry. Did that help? Uh-oh. You still there, Lamel? I think that was you that asked that. If you are, we're good. It is pulling back now that I see that though, because I could have sworn I was up at close to like 6,800 and now I'm at like 63. What are you doing, Nasdaq? Well, not too bad. It is going to pull back though. It is going to pull back. It's already started. Look at the block form right here. So it's pulling back now, and it might pull back all the way down here because it does that stuff. As long as it doesn't come here, I'm good. Like, don't come any further. Just here is okay. Don't come down here. All right, so that's NAS. Hopefully that answered that question about the stops. Moving into profit. I'm gonna take profit here in the partials here in a minute. And then that's about it there. I'm gonna do the same thing on the other account too. So same thing here. I gotta take partials here because that copies to some other stuff. All right, so that's them. So if there's no other questions in Forex realm, I'm gonna go switch over to Nadex real quick. And where is my Nadex? Oh, I'm not in any trades in Nadex because all of them hit TP. I'm gonna show you. I'm going to show you. All of them hit TP. I was in 60 contracts. Y'all can see Nadex, right? Let me know. Y'all can see it? Okay. How long do I like to hold trades? It depends on my mood, honestly. Like this week, I kind of need NAS to go ahead and hit that all-time high before Christmas Eve. If it don't, I'm gonna have to get out these trades a lot sooner because I don't want to hold it over the Christmas holiday. Honestly, I don't want to hold it past tomorrow, honestly, but that's just because of this week. But normally, if I take a trade off of the H1, I'm usually at TP, which is the zone, the H1 zone, within a day and a half. If I'm down on the M1 or the M5, you already know that's the same day, same hour scalp. You guys, I don't know how I feel. That'd be the longest scalp ever when I should be done in like 30 seconds and it takes like 30 minutes. That just means my position was horrible. That's all that means. But that's how long I typically trade them, especially on indices. But it got to be a good move, like what I see here with the indices. It got to be something phenomenal that will want you to hold it that long. Because I'm going to go back to Arrow real quick so you can see what I'm talking about. And a couple of people might understand what I'm talking about. If you go to the daily chart, right, and you zoom out, look at the stair steps that it does, right? So can you imagine you are at the bottom of the stair step? You like, this is a W right here, right? You here at this W and you hold it. Look at how far it goes. Look at the pullback it does and still doesn't come to your position and then keeps going until COVID hits. Okay. And then you stopped out. But then again, you wait for what? The next W, boom, take off. You see what I'm saying? Look at the stair steps that it does. I've been trying to catch the stair step off of the daily and hold it. If I can hold these positions, like just one of them, right? Hold that thing for the year. For the year, just imagine for the year how many pips that is off of $100 account. Swap charges don't matter. It don't matter because the amount of profit you would make negates all those swap charges and then some. So don't get caught up in the holding trades overnight thing and like dealing with the swap charges. I was just being cheap last night. But honestly, going forward now, past 5 o'clock tonight, I'm going to be in swap charges if I'm planning on holding this trade till tomorrow. The swap charges off of 3 positions, off of 0.1, for instance, it's 80 cents commission. And then the swap charges might be what, 30 cents, maybe $1. Let's just say it's $1. Let's say it's $1 a day. right, for the year, if I hold this position, right, just one position, $1 a day is never that high, but let's just say that it's $365, right? We're not on a leap year, so it was 365. Oh, it's 2022 a leap year? No, it's not. No, it's not. So $365, right? But you're in this one position on a 0.1, and right now you're up like $63 or something like that in one position in one day. And you got $1 a day of swap fees to deal with for a year. And let's just say you average $100 a day holding that one position. You see how the swap charge ain't nothing to your position then, if you want to hold it. That's why I'm getting more into the benefits of holding and kind of riding through the retracements. That's what I mean about, that's kind of what I mean about that. So it depends on how I feel, and what setups I see determines how long I hold the trade. But I've been itching to get in on the beginning of a step on these indices for a while. And I know I'm in it on US 30 for sure. I see that. Like if you look at my US 30, I'm only on that one position. I'm going to try my hardest to hold this. Look at the step is the step is the support zone. That's what I'm talking about. So imagine from support zone to support zone, right, is your step. So just like here, just top of the zone to the bottom of that zone, that's 18,000 pips. And that's in from, what's the zone? This day here, that's March to December. All right, so that's 9 months. That's over 18,000 pips. What am I talking about? That's more than that. I think that was 180,000 pips. Let me do my math again. Let me not. Yeah, let me say my stuff correctly. That is 191,700 and something pips. Yeah, not 18,000, 180,000. So with that all being said, those are the trades I'm trying to hold on to. And I see the pullbacks happening, so I see that. So we'll see what happens there. But I'm about to move those. All right, so any other questions on Forex? Oh, let me jump back over to Nadex real quick. So Nadex in the positions, start off with in demo. This is the demo one. All right, I took one of these in live, but the demo one starts off with a 10K account. If you've never been in Nadex before, this is binary options. Okay, so with binary and this is Nadex binary options are completely different than pocket options, quotex, binary cent, all them. Way different. Okay, but, and I'm going to be doing more Nadex videos because I'm going to be showing y'all the same thing. You get these order blocks down, you can trade Nadex. Here is the account started at 10 grand today. This is where it's at now. You don't believe me? I'm going to show you the history, okay? History, transaction history, last 24 hours, right? Let's go to last 24 hours. So I know I took some L's within the last 24 hours. Did I? Yeah, okay, boom, got it done. This is when we put it back to 10,000. And then this is when I started, all right? So this was US 30. This is Nasdaq. USTech 100, that's Nasdaq. All right, you see how it says March right there? March means you're dealing with futures. Futures, index futures, March contract. Telling y'all, if y'all start getting used to trading arrow with the bag entry like you guys are doing, with the order blocks and arrow and Forex, apply those same methodologies into futures, into Nadex. Works. All right, so I took this trade. I bought 5 contracts. All right, and at $48 per contract. All right, I usually risk anywhere from 48 and less. I try not to go over 50. I don't like paying $50 per contract. I'll do more videos about Nadex, but I'm just trying to show y'all what I did. All right, so in this one, 5 contracts, I spent about $240, right? Sell to close, $243, only made like $3.75. Well, actually, this is an L, $243, and I spent about $250. So it was like a $7 loss. Why? Because I was trying to buy more contracts and I hit the wrong button. That's why. And see the price here, 15742.9. That's what I was trying to do. Expiring at 415. That's what I was trying to do. But I said, fine, I'm going back in again. So 3 minutes later, 9:56 p.m., I bought 10 contracts at a higher strike price, $48 per contract. Spent $480. Spent $500 for that. Okay? That's how this works. One position. For the buy, because I'm in a buy, right? One position. Second position, right? It started pulling back. I said, no, we're going to get in again. Lower strike price right here, 742. It started pulling back last night. This morning, excuse me. This was this morning. When that pullback started, I started jumping into additional positions in Nadex. Same thing. I'm spending about $500 per trade. Okay. This is off a 10K account. I'm doing this here because I'm planning on putting in anywhere from 5 to 10K more than what I have in my live now. So that way I could replicate the same move. All right. Same thing. I was in a total of 6 positions at 10 contracts apiece. That's 60 contracts. All right. 6 positions, paying $500 per trade. So I spent $3 grand. Right? $3 grand on those 6 positions. Okay. The goal is to get out anywhere from 50% to 90% payout on my trades. Okay. I never, ever go to expiration on my trades. Why? Because every time I have done so, there was a pullback that knocked me out of my winning trade because I was trying to be greedy and go for a full payout. One of the great benefits of Nadex is that you can set your profit. You can set your TP and get the heck out before it closes, before it expires. Okay. So that's why I am so excited about sharing Nadex with people, because other binary places, you can't do that. If you put yourself in for a 15-minute expiration on, say, pocket option, you got to sit there and be committed for those 15 minutes. I got to tell you, I got a problem with commitment. So I may be married, but when I'm in trading, I got an issue with commitment. I need to be able to get out this trade if it turns against me. Okay. Nadex gives me that opportunity. Not only can you close it beforehand so you can mitigate your loss, but you can close it ahead of time if you have your TP hit. Now, I told y'all I was in 6 positions, right? 6 buy positions. Whenever I'm in a buy, and I actually have a Nadex video on my YouTube channel if y'all want to see, because I go over how to set your take profit. If I'm in a buy, I go for set target price of 92. Every time I do that, if I risk $48 and I get out at 92, I get paid out the difference. My difference payout is about $44, right? That's a $44 difference. So multiply that by 10. I get paid $440. I spent $500 to make $440. You're gonna be like, well, Jackie, that's not really the best payout. You know, you're spending more to make less. Not necessarily. I'm spending $500 and I get my $500 back plus $440. Okay, so it ain't that bad. That's like a 90% payout, 80 to 90% payout, right? So, and do that multiple times. I did it 6 times. 1, see how it gets out at $92 right here, sell to close. I set my TP. That's the first one. That happened at 12:41. Okay, that's the 15,650 price. That's what you see here, 15,650. That's my strike price. When did I get into that trade? 15,650. When did I get into that? Oh, 10:32. Got into that at 10:32, got out at 12:41. So it took me 2 hours to make $440. 2 hours. Let's continue. Another 440 right here, about 15 minutes later. Okay, this 673, when did I get into it? About 10:10. Another 2 hours then. Yeah, about 3 hours, about 3 hours, 2 hours and 45 minutes to make another 440. Who wouldn't want to make $440 in 2 hours and 45 minutes? I'll wait. That's 2. Here's 3. Here's 4. Here's 5. And here's 6. All 6 of them.
Hello, friend.
Hello,
My
darling.
best friend.
How are you?
Oh, I'm not doing too good. But I just keep listening in and out. So what is this that you're winning again?
This is Nadex, darling. Nadex binary options.
Oh, the binary. Okay, binary. Okay.
This is a little different than the other binary, though.
Oh, well, I still got to catch the first one. But okay, I was listening. Excuse me, guys, because I'm at work. And so you were trading off the 4 hour?
This
earlier
one, no. I traded
earlier.
Oh, in the Forex one?
Yeah.
No, that was I traded off the 1 hour.
But 1 hour.
Mm-hmm.
Okay, because y'all confuse me. Y'all tell me look at the later time frame and then jump in the minute 1 or minute 5. So you did put your trade in on the hour 1, right?
Yeah, my first position was off of the hour because I had I saw an order block, so that was off the hour. So yes.
Okay, that I didn't ask you then, but okay. I'm sorry for interrupting. I'm
you
just
good,
in
darling,
and out of
you
work.
good.
Merry Christmas, everybody.
Merry Christmas, darling. And I'm recording this too, so I'll make sure I drop the link when I'm done.
Oh yeah, drop the link so I can listen to it from the beginning.
Okay,
Thank you.
got you. I got you.
Okay.
But yeah, that's all 6 of them won. And so if you want to look at Nadex, I always go to binary options. And when I'm on the indices, what I just saw there, what I showed y'all is here, clicking on the indices, and you have all the indices you can trade from. So those of y'all who like DAX is right here waiting for you. These lines just signify different expirations, but USTech 100 is Nasdaq, and y'all know I've been on Nasdaq for like the last month and a half, I think 2 months. And I stress sticking to maybe 1 to 3 pairs max to trade, because when you start to become familiar with how a pair moves, you can apply that in other financial markets, which is what I'm doing here. I've been studying Nasdaq, so I'm comfortable with taking that same trade I took in Forex here in Nadex for binary option and saying I'm expiring at 4:15. So I'm clicking on this daily, and I'm gonna be going over this more, but I'm just giving y'all the gist of how I went about it. When you click on the daily, you have all these numbers here. These are strike prices. All right. These are what you're saying is you're answering a question in binary. Is price at 4:15 p.m. today going to be above or below the price that you're bidding on? Okay. So I was in a trade of 15,673.9. I put buy. So I clicked on the buy here. You can't do it anymore because it's gone. But when I had it, you clicked on the buy. So it looked like this per se. Okay, it looked just like this. It wasn't at that price. Remember, I only pay like $48 for mine. But it's going to say, and it'll pop up a nice little chart for you. And you can switch through the time frames if you want to. But the answer is, here's the question right here. Will this NASDAQ finish higher than this price at 4:15? Yes, you're buying. How much are you risking per contract? It'll tell you your loss if you lose and how much you win if you win. Place your order. Or no, it's going to be below it. Take your sell. That's all that binary is. Okay? Your decision in this is to choose the right strike price and be aware that it will finish there by your expiration. So when I said that first one I took last night, I said NASDAQ is on the way up. So I'm choosing 15,673.9. I think I took that this morning, actually. 15,673.9. When it was pulling back, this foolishness that it was doing, when it was pulling back, I said, yes, you are still going to be above this price here. And I'm going to risk $48 to say $48 per contract to say it will be. By 4:15, you will be above there. That's the question that I'm answering. And that is how much I'm bidding on that to prove that I'm right. $48 per contract, and I took 10 contracts. So I spent $480, and then you got to pay commission to get in and out. So it's like $2 per contract. So that's why it's 500 total. And I turned out to be right, as we clearly can see. And as price was moving up, it was moving up from that $48. So here's a good example right here. There's $48. If I was to take the buy right now, okay, I'm saying that price is going to end up by 4 p.m. above 15,972. If I take the buy, it'll put me into a trade. And as this price goes up, I'm in profit. If it goes down, I am losing. That's how that works. And when this price hit 92, which is what I set my take profit for, it closed me out the trade immediately. Took my money and ran. And so overall today, 6 positions at like $440 a piece. I made like over 2K, what is that? 2,500 a day. Who wouldn't want to do that? And I did that in Nadex. And you know, you could do the same thing in Forex too. If you got funded accounts, you got those bigger balances, you could take those higher lot sizes. But the only thing the difference is when you're in Nadex, you already know what your risk is, right? Point blank, period. How much you're risking and how much you're going to lose. Technically in Forex, you should know the same thing based on your lot size and your stop loss. Apply those same methodologies and it'll work. And that was that same Nasdaq trade. So if I'm trading, and I'm going to give y'all an example now, binary options, let's go to 5-minute expiration. And then I got to get ready to go pick up my kids. In the 5-minute expirations, one of the things about Nadex is the 5-minute expirations are only on the currency pairs, and these are the only currency pairs you can do these on. Okay, so with the 5-minute expiration, I have been on AUD USD. And y'all gonna be like, really, Jackie? AUD USD? Why? Because this slow as molasses moving pair moves slow enough for me to take a trade off this thing in Nadex binary options with an order block and help me win. That's why. If I was in GU, that thing impulses on lower time frames way too much for me. So that's why I'm not on GU. And there is no 5-minute expiration on the indices. The lowest you can go is 20 minutes. You have 20 minutes for indices, and then a 2-hour expiration, and then the daily one that I showed y'all. So we have a new 5-minute one that I got 5 minutes left, y'all, and then I gotta go. Here's AUD USD, 71.53 is the strike price. I clicked on that one because that was the one that had somewhere between close to $50, but it ain't nowhere near $50, but it updated this chart. I'm gonna come down to look at these beautiful time frames you could choose from, 1, 2, and 3. Starting from the 5-minute time frame, I'm gonna click on here. Why is this? I don't know why this is saying expired, but anyway, looking at the 5-minute time frame, look at that. Open it up. Do we have an order block here, y'all? That look like an order block to me. I got a rejection here. It ain't going any further. Is that enough for me to go ahead and see if I'm going to take a sell and say it's going to be below 71.53? Heck no. Because this thing could turn bullish and push right up. That ain't even a really confirmed block, as you can clearly see it doing right now. No. It ain't time to take that buy. It ain't time to take that sell. This thing needs to turn around and go down. And since it's the first 5 minutes, which I'm in a 5-minute expiration, I ain't got enough information to take this trade. So this would not be a pair I would look at. Now, 71.55. This is your price. This is where price is at right now. It says it right here, and it says it right here. 71.54.3. Is price gonna be above 71.55 in the next 3 minutes and 10 seconds? Possibly. I can't go off of a 5-minute order block because right now a 5-minute block is telling me we should be selling. So I'm gonna go down to a 3-minute time frame. I got a 3-minute. Whew, clearly we got a bearish block. I don't think it's going up. That thing look like that thing wants to come down. But is it going to come down hard enough to get below 71.53 for me to take a sell here? Not sure. Let's go down to a lower time frame. This is what I do in Nadex. I'm looking for blocks. I'm looking for what price is doing with these blocks. Now look at price pushing up. You see that on the 2-minute? It's pushing up. Look at what it's doing. If that thing pushes up some more, it's pushing this price up, possibly saying that it will go above 71.55. Look at how this is going up. It's 4 pipettes away. If I was to take that buy, I would take the buy here, and then I would say, okay, setting the price for 92. As soon as it starts pushing up more bullish, then that would tell me I'm in favor to win. If not, I'm gonna take that L. I don't see nothing telling me to take no buy right now. Everything's still telling me we dropping. All this does is tell me right now is that we were pulling back. Now look how strong that pullback is though. Are we pushing up? That's the 2-minute time frame. Let's go down to the 1. Look at what the 1-minute look like. This is the block, bullish block off the 1-minute that caused this push up. But as you saw on the higher time frames, there was order blocks preventing it from continuing to go up. So I feel like we're pushing down. Is you going to push down low enough that it's going to get below 71.53? Doubt it. But you are going to probably end up being below 71.55. And that's how I determine to take my trades in Nadex using blocks. You don't see nothing else on here, right? You don't see no moving averages. You don't see none of that stuff on there. No, just order blocks. And the only other thing I would use arrow for in this is being on the M1 time frame and the M5 time frame and giving me, ooh, look at the push down. So it might get below 71.53. Got to do it in 40 seconds though. This is why I say I try not to go to expiration, because a mess like this that could happen, that could knock you out your trade. So for instance, if you're in the buy here right now, and this thing goes below 71531, you lost. And it could happen within 15 seconds left if it wants to push down really, really hard. So that's why I don't wait to the end. But and using arrow on this to help is set an arrow on the M1 time frame and on the M5 time frame. And when you get an arrow alert in the direction of the trade you're thinking to go, arrow alerts signify momentum in your favor. Okay, so I know, right? I love y'all. I love y'all. I do have to go though. So I have to go pick up my kids from school. Now look at this, 7153.1. Now I'm looking at this trade. Look at the drop it's doing. Didn't I say from other order blocks, it was pushing down? I'm going to take the sell. That's how I would take the sell. And I would only risk $48. That means the price needs to be 52 for me to get into the trade, place the order. It showed you there, max loss was 48. If this goes to 52, it's going to put me into the trade. I'm going to go get the kids. It's going to put me into the trade from my pending order, put me in a position, and then I would go ahead and set my take profit. See, pending orders are right there. When this hits 52, it will put me in. All right, but it's dropping like a bad habit. Okay, but again, we got 3 minutes left, so things can happen in these 3 minutes. Boom, I got this. Look at this bearish candle. And now we in the new we about to be in a new candle here soon. Still everything's pushing down, but it ain't pushing down enough, right? Not enough. But look at my 3 minute. Same thing. This is what I just did earlier was top down analysis from a 5 minute down to a 1 minute. Same top down analysis you would do in Forex from the daily down to the H1 down to the 1 minute. You see what I'm saying? Now it pushed up. See how price jumped up here? So it pushed up, put me in a position. All right. Whew, that thing went from in profit to not in profit quick. But now here's the set take profit right here. Set the profit target. If I want to hit it to 92. Oh no, I'm going to sell. My bad. I'm going to sell. I go down to $44. Right. That's what it says. I'll win. Place the limit order. That's how you set it. That's how you set take profits now. If I'm in a sell and it's pushing against me and I want to mitigate my loss and I think it's actually getting ready to push up, I can close the position right now and just take whatever L I have here or take whatever profit that it shows here. Same thing. The only thing with these 5 minutes is it can go in and out of profit really, really fast. All right, so now this is going completely against me. So I don't think I'm gonna win this one. I'm supposed to be 7153.0 and below. Price is at 7153.5 for it needs to be at 0 and below in order for me to win. Okay. And I got 2 minutes and 7 seconds left for it to do so. All right. Based on the 3 minute time frame, and we turn a little bullish. We turn a little bullish. If I go down to the 2 minute, ooh, look at that. See, 36. Oh no, look at that. I got an order block, a bullish order block. Just got formed right there. Son of a you know what, AU. And then look at the M1. Look at that. Bullish order block, which is what pushed it up, you know, and got me into the trade. And now it needs to push back down in order for me to win. Remember, it needs to be 71530 and below in order for me to win. Okay. At expiration. Or it can hit my profit, meaning this needs to be at $8 in order to hit my take profit. Okay. Or if I don't want to stay in this trade anymore, these things give you an opportunity up until 30 seconds left. So when this thing says 30 seconds left, you can't close out or set a TP anymore. Okay. So if I wanted to go ahead and quickly save my life and close at just $4 drop, I could do that. Or if I'm really feeling strong about myself and I'm like, no, you are going to close below 7153, then I'll just let it go. See, I got 7 seconds to make a decision. I'm just going to go ahead and let it go. See, and when 30 seconds go, all that goes away. So I can't do nothing. Now I am committed. So that's how the commitment thing works. And if this thing says 71531, I lose in 17 seconds. So this is an example where I could have saved myself an L by getting out of the trade early or taking that profit that I could. See, 3, 2, 1, 0. Whoo, did I win? Because that was kind of close. Let me see. Did I win that? Let me just go to the last 6 hours. I don't need everything. Boom, sure did. Full profit. Whew. Let's not do that again, y'all. Let me get out of here. Let me get out of here with y'all.
And again. We appreciate you.
No problem, no problem. I'm going to stop recording.